So we'll start with the definition of salary, section 17, class 1. So as per the definition related to the salary given in Income Tax Act, these are called salary. Either it may be wages or any annuity or pension, gratuity, fees, commission. If you are receiving the salary in advance, you work during the leave days and you expect some payment for that, which is called salary in lieu of leave. Instead of leave, you will be getting the salary. And provident fund, the moment you are transferring the unrecognized provident fund to the recognized provident fund, that will also be considered as salary to the extent of taxable income. NPS, all these things are again salary only. Agniveer corpus fund also a part of salary. You will be now able to understand all these points: wages, annuity and pension. So post retirement you will be getting monthly return, which is called pension, also be considered as salary. Any gracious payment at the time of retirement, a lump sum consideration payable by the employer to employee, also salary. Some additional work if you do for the employer and getting any fee or commission, that also be falling under the salary head. Next month's salary if you are receiving today, then also be considered as salary taxable in this year. And leave days also you go for working for some emergency, employer offers you some extra payment for the leave days, that will also be considered as salary only. RPF, UPF, NPS and Agniveer also be considered as taxable. That RPF, UPF and all will study separately here, so that you will understand that later on. NPS also you will study along with ATCCD, Agniveer corpus fund also you will study later on. As such, now you just keep that these terms are also be falling under the salary only. You no need to mug up now. If you are not able to recollect, no need to worry about that. After reading all these things, because we are going to study in detail how to calculate the taxable amount in case of gratuity, pension and annuity, leave salary and all one after one, naturally then you will be able to understand this easily. Is that okay? And we have a separate topic to be discussed with respect to the provident fund, NPS, Agniveer. Right. Okay. Yeah. Next. Section 17, class 3 and 2. Okay. We'll study in detail. This is all about section 17, class 3. You'll study the perquisites in detail along with section 17, class 2. Any benefit if you are receiving from your employer which is not in the form of cash or in kind, just in a kind, then it will fall under perquisites. Profit in lieu of or in addition to any salary. Profit in lieu of or in addition to any salary. We'll study that in detail under section 17, class 3. So from this it is very clear what is called salary. No need to worry about that. Just go and refer section 17, class 1. Under 17, class 1 we have so many items. Apart from that, the item mentioned under section 17, class 2 also be falling under salary. 17, class 3 also falling under salary. So what are the things are there? Wages, annuity, pension, gratuity, fee, commission, perquisites in addition to any salary, profit layer of salary, advance salary, leave salary and everything. So we have these two content to be discussed separately. Requires no much explanation here. You just understand the list only. We have a separate topic to be discussed, this one and this one. So we no need to get explained these things here. So once you complete the chapter, you will be able to understand. Section 17, class 3. Profit in lieu of salary. Profit in lieu of salary. Okay. Rather than getting salary, you will be getting a share of employer's company's benefit. That's why it is called profit in lieu of salary. Will be also forming part of salary. Is that okay? As already we learned that any payment is considered as salary. Any receipts of yours considered as salary means it should satisfy some of the condition. There should be employer-employee relationship. For the terms of agreement of means terms of employment, anything done by the employee to the employer will also be considered as salary. Is that okay? Some cases, it seems to be not in that norms, yet it will be considered as salary. That will be listed under section 17 clause 3. So, employer, employee, employer, employee. Employee rendered service to the employer. For that, employer offers him payment. This payment is called salary. This payment is called salary. Am I right? What are the services are done by employer to the employee? One is all about, as per the terms of agreement, terms of employment. At the time of recruiting the employee, employer will give a list of jobs to be done. So employer does those jobs for the employer. That will be salary. Any payment he receives from employer also be salary. Terms of employment. And sometimes employee may be appointed for an assistant manager posting. Immediately after appointing the employee as an assistant manager, sometimes later, manager left the job. Employer now debuts that manager's role also be taken care by employee. So the payment is fixed for assistant manager, but employer exploits manager's category jobs from the employee. Sometimes later, the employee demands, sir, I joined for assistant manager, 5 items to be done. For that, you have fixed me 50,000 rupees salary. Because of the resignation of manager, I was given one more additional work for past 3-4 months. So rather than 5 workload, I now have 6 workload. So kindly consider recruiting a new manager or increase my pay. So immediately what happens? He now rises the salary. Rather than the salary payable to the assistant manager, a new salary is fixed, which is equivalent to manager's salary. This is called modification of terms of employment. Modification of terms of employment. Hereafter, your role is only manager, not assistant manager. Until now, you got only 50,000 rupees as we recruited you only for the assistant manager category. Yeah, of course, because of non-availability of manager service, we promoted you hereafter as a manager, but since the last 6 months or 7 months you worked as a manager only without any extra payment, without any designation. So I restate that for the last 6 or 7 months the salary is revised and I'll give one extra honorarium for that case. That amount will also be considered as salary, but profit in lieu of salary. Sometimes the employee may be not doing well. He may be terminated. Your service is okay, or our business is not capable of giving salary anymore. So you can leave the job. So we want to go for lean management. So we want to reduce the number of employees because for the well-being of the company's profitability. So we want to terminate you. So the third case, he wants to terminate. He wants to terminate. Okay, simply he terminates. For the termination, immediately employee says, sir, I joined here believing that this will be for my long-term employment. Because of that, I shifted my residence also from other location to here, and I build all my personal assets and everything here. Suddenly, if you are terminating me, it's a big loss for me. No need to worry about that. So we'll give a compensation for that. So for this termination, any compensation is given by the employer to the employee also be considered as profit in lieu of salary. Clear? Compensation from employer or former employer. He may be employer or he may be former employer. How this could be the former employer, sir? Resigned. Okay, employer says we don't have sufficient cash balance and profit to offer you salary anymore. So you just get terminated. So he got terminated. Okay, as per the terms of agreement, if the employer terminates him without any notice period, give some compensation. Give some compensation. 3 months notice period compensation, 4 months like. But employer says, I don't have any cash, you can go off. So then he resigns and joins some other employment. Few years later, 2 or 3 years later, employer says, now we recovered. So we have sufficient balance. You can now have your profit. Have this. Now he is no no more employee for the employer. Yet, any amount he gets, okay, for the termination for since the earlier work will be considered as profit of salary. Is that clear? Notice period. Notice period. This is all about termination. Not only that, second one is all about modification of terms of employment. These two. One is termination, another one is modification. Next one being A and B. A gives him a payment. A gives him a payment. As you know that any payment received by B will fall under salary only if there is employer-employee relationship. Now A and B having no employer-employee relationship. But what happens, A may be, okay, A may be former employer, or prospective employer. Okay, then whatever the payment done by A to B will be considered as salary only. Is that clear? What about the prospective employer, sir? Maybe TCS, B may be students of engineering college, information technology, right? So B. And during the campus interviews itself, the last year, TCS goes for the campus interview and selects B and offers him the offer letter to join their company 1 year later. So you finish off your degree and then you can join with us. We'll start offering you a stipend, say around 10 or 15,000 rupees during the last year of your education. But you have to you have to sign a contract to work with us for 3 or 4 years after the after the study. So after the studies, if the student qualifies better, he demands 50,000 or 1 lakh salary. But during the campus interview, the last year itself, they choose. So they will enter into a contract. You have to work with us for at least 3 more years with a salary of 60,000 rupees. If you commit, you will be getting 10,000 rupees during your last year's course. And he will be happy. I will be getting 10,000 rupees every month for the 4th year, last year of my BE. Thereafter, I am going to work for additional salary. So he has a 2 benefit. During the last year itself, he gets some salary stipend like, and immediately after the course, he gets a confirmed job. So pretty interested to sign, and he signs. Until that period, he is studying in the college last year. Whatever the remuneration or payment he receives will be considered as salary only. At the time, TCS and that employee is no more being employer-employee. Yet, TCS becomes the employer of that person later on. So, any payment because of that he gets, that will be considered as salary. Not only prospective and former employment also. Okay. A may be working with B. Okay. Probably employer-employee. A and B. So this happened up to 2020. Thereafter, B resigned. So after resignation in 2025, okay, 1st January 2025, okay, for the new year, A calls B, when you resign, we are in poor state, but you worked very hard during your presence with us. Now we are financially viable and we are growing up. In memory of your past year's performance, now I will offer you 1 lakh. So because of this 1 lakh offered by A to B, now A and B having no connection as employer-employee yet. Because of the prior working connection, still this 1 lakh will be considered as salary. Is that okay? Hope you will be now able to understand. Third point. Any amount from any person, it's not employer, any person, A being any person, not being the employer, Before employment is prospective. Before employment, he is not getting employment. He will get the employment later. Until that period, he gets a small amount like stipend. That stipend will be considered as salary only. After retirement, the second case. In appreciations of his better performance during his tenure of service, okay, after some years later, probably retirement later or resignation later, few years later, the employer offered him some money. Any amount offered by the employer will be considered as his revenue, salary only. Is that clear? Hope now you'll be able to understand. These are the three cases. One is all about termination, notice period compensation. Next one is all about modification of terms of employment for that any compensation is given. Third one is all about from any person when before getting the employment or after resignation, whatever the amount he gets, no, both the cases will be considered as profit in lieu of salary. This will also be part of salary only. Is that clear? Now, 3 points over. Now let's go for the fifth point. Key man insurance policy. Employer, employee, employer, employee. Okay. Employee renders service to employer. Further, employer offers him what? Salary. No problem. There is no doubt. But this particular employee, no, very, very important person. Okay. Because of him only, major profit is earned by employer. So, employer considers this employee being the key man. He is considered being the key man. Okay. If anything happens to him, any death or accident or inability to move because of any accident, whatever it may be, will definitely affects the profitability of the employer. Is that okay? So if anything happens to me, then I have to support my family. How will I be able to support? So simply I can go for insuring my life, right? So by insuring my life, I can support my family in the case of emergency. Similarly, employer says in his absence, the employment of that business will be in struggle. They will lose some profit. Immediately, employer goes to insurance company, LIC. Sir, I want to insure, sir. Okay, you can insure to on whom? So I want to insure on this employee because it's our key man. Because of him only, we are getting around 10% of our profit. If he resigns or dies, then automatically there will be small jolt in our profitability. Probably rather than 100 rupees, I may get only 85 rupees or 70 rupees. So I want to safeguard his life. Okay. Then for that, he makes a payment. This is called premium. This is called key man insurance policy. Key man insurance policy. Is that clear? So something happens later on. Then employer demands, sir, an unexpected thing happened. Kindly give a compensation. Now employee LIC gives the compensation. If the employee gives the compensation to the employee, this compensation, say, take 10 lakhs rupees. That any compensation employee receives from LIC will be part of salary. Otherwise, profit in lieu of salary in section 17 class 3. So, what is the benefit for the employer? Because of insuring employee as a key man by paying the premium, employer also will get the compensation. If employer gets any compensation for the key man insurance policy, then it will be considered as profits or gains from business or profession, PGBP. If employer gets, then it's called as PGBP under section 28. If employee gets, then it will be considered as salary. If there is no employer-employee relationship, some third party gets, then it is considered as income from other sources. So this will fall under 3 different topics. Key man insurance policy. Already I told you, if you are strong with salary, house property, capital gains and PGBP, the 5th chapter is free. If you study master with 4, the last chapter is free. Okay. All the things what you left over to be covered here will be taxable in the 5th chapter. So that's all. So the 5th chapter will complete in one session. So we need more time for salaries as well as PGP. Yeah, of course, including capital gains also. The first weightage will be for salary at the inter level. The next PGP, third will be capital gains. House property is the easiest chapter. Maybe I may complete in the matter of 2 sessions. That's all. Income from other sources. Just a recap of all this topic. I'll always tell you. So we refer that key man insurance policy in salary, no? Then I'll ask you, we have studied in PGPP, no? Then you will say, no, sir. So that will be the problem always. It will be out of your memory. So cross-verify, this will be covered in later lecture also. Clear? Hope now you'll be able to understand the key man insurance policy case. And one more case, the last case. 4th one. Okay. Now, some employer-employee deposits in some fund or somewhere. Later on, employee gets the benefit from the fund, then this will be considered as profit in lieu of salary. So employer thinks employee is not proper in handling the money. So for his services, employer offers him salary, say 50,000 rupees. Apart from that, employer he himself deposits 5,000 rupees in a scheme for helping the employee. He himself voluntarily creates a fund. Okay. At the time of his resignation, employer is pretty happy. You have served us good service. So amount is deposited so much in your fund account, in your name. So probably around 12 months, every month 5,000, 60,000 rupees. We have invested almost 10 times, 10 years, 6 lakhs. Together with the interest, 6 lakhs plus some interest, 2 lakhs, everything put together, you are getting 8 lakhs from whom? This fund. 8 lakhs from the fund. Is that clear? This 8 lakhs will be considered as profit in lieu of salary. From here you are receiving any amount. What's that amount? This 8 lakhs. From where? Any fund. Okay, any fund. Any fund means this one. Okay. So this fund usually created by the employer, or he may have his own fund, or he may have supported employees sometimes later. All these cases. So he creates a fund, deposits there at his resignation, retirement. He gets the fund from the fund, mutual fund, like he may get it. Or employer can deposit his own fund in his own name. Sometimes later he withdraws and hands over. After resignation, retirement, later amount deposited by the employer, because of this reason he withdraws and gives, whatever it may be. So from this it is very clear. Employer deposits a fund and fund offers him to the employee, or he can deposit in provident fund and later on he gets a fund from provident fund, or from his own pocket money, or after some times, probably 3 or 4 years later, employer may offer somehow based on some mode he can offer. In all the cases, what happens? No, employer keeps depositing. He retires by 50th year. Okay, age being 50 at the time of retirement. Employer says you can retire by 60, but you retire by 50. Okay, so you are retiring much ahead of your retirement plan. Okay, retirement age. So the employer says that I keep on depositing some money for your benefit. Suddenly, if you retire, then I may be losing. So wait for 10 years. 10 years later, all the deposits may be withdrawn and giving to you. So at the age of 60 only, I am able to release. So such a way, he can delay and release some payment. So by the time there is no employer-employer relationship, there is no employer. 10 years later, is not being any more employer-employer, right? So automatically, any accumulated fund later on or amount deposited later on can be used for settling this amount. That also be considered as profit in lieu of salary. So under section 17 class 3, profit in lieu of salary includes 5 items. One is all about termination. Another one is modification. Another one is before employment or after employment, where the employer may not be employer. Any person may not be employer, right? So here employer, here employer. The employer may be present or former employer. Here we never bother about the employer here, right? And the last case is depositing in any fund or in PF, or he himself can have the money. From that money may be payable later on. That will also be considered as profit in lieu of salary, right? And fifth one is scheme and insurance policy. So any benefit received from the insurance company where the premium is paid by the employer on behalf of the employee, that benefit will be considered as scheme and insurance policy. If the money compensation received by the employee, then it is called profit in lieu of salary. If the compensation received by the employer, then it will coming under PGBP. The fourth point, in this case, except. So employer to employee, any fund, he deposits the fund in any scheme. From the scheme, the employee gets later on. This will be considered as profit and in lieu of salary under section 17 class 3, isn't it? But this fund has some special government notification, like some pension, PF, especially recognized provident fund, and statutory provident fund like, and superannuation fund like, commuted gratuity like, these cases will be totally exempted because these things are listed under section 10. These things are listed under section 10. What are they? Gratuity, commuted pension, retrenchment compensation, RPF, and superannuation fund. Okay, all these things. Superannuation fund. Okay, provided extend exempt under section 10. Sir, I could not remember and I don't know what are these terms, sir. No need to worry about that. So we are going to study all these things one after one now. Okay, gratuity to some extent exempted, commuted pension to some extent exempted, retrenchment or compensation also to the extent mentioned under this provision will be exempted. RPF, PPF, superannuation, usually PPF will not come. So rest will be most probably exempted. Most probably exempted. Is that clear? So we have to cover up all these things one after one. So once you learn that, you don't need to mug up this one here. You don't need to mug up this here. Is that okay? So now you have to understand only 5 points. What are they? Termination, modification, former or prospective employer, and key man insurance policy. The last one is routed through fund. Routed through fund. Everything will be taxable under profit relief salary only. Is there any exemptions? Of course, we'll be studying all these topics. So if you cover that, you don't need to mug up this. So hope now you'll be able to understand what is called section 17 plus 1. So as per salary, wages, pension, gratuity, fee, commission, where perquisites also, we have covered one of the aspects in detail. One of the aspects in detail. Profit in lieu of or in addition to any salary covered. Clear? Now, how to compute the salary, sir? How to compute the salary? Clear? If an assessee comes to you, find out my tax liability, sir, then automatically what you have to do? You have to follow this step for the computation of salary. For the computation of salary. Clear? Basic salary, dearness allowance, fees or commission, bonus, advance salary or arrear salary. All these things are again taxable. Ask him what are the things you are getting from your employers. So I am getting salary, sir. Okay, good. Basic salary is taxable. Some inflation rates, no. Because of that, you will get some extra benefit. Allowances called as dearness allowances. Dearness allowances also will be considered as salary. Okay, dearness allowance. And for extra work you have done for the employer, you may get sometimes fees or commission also. If you are receiving from the employer, also taxable salary. Sometimes bonus, Diwali bonus and festive bonus, whatever it may be, also taxable as salary. Next month's salary, if you are receiving today, also be salary will be considered. Previous year's untaxed salary, if you are receiving today, will be also salary named as arrear salary. So these are very, very simple. The first block is very simple, straightforward. On appointment, whether you do better or not, basic some number will be given, which is called basic salary. Currently, we don't have such structure, only consolidated pay. We don't have breakup, 5 lakhs, that's all. For what purpose, sir? Never. We never talk about for car and house property separately, 5 lakhs will be, that's all, per annum. That's what about consolidated pay structure. But in most of the government sector, no, there will be breakup. Basic salary, dearness allowance, for the extra duty you have done for the management, no, you will be getting a small extra benefit like fee and commission. Some festive season, you will be getting the bonus. And as it may be private employment, right? Usually you will be in need of fund emergency, so you will ask the money to be released ahead, advance salary, everything is taxable. Dearness allowance is nothing but an allowances for the inflation, allowances for the inflation, right? So the dearness allowance is also part of salary. Usually it will be calculated based on certain percentage on the basic salary. Okay, so understand that what is called dear. What is called dear? Usually what you understand about dear is not dear here. Dear in this case is also about costly. Okay, costly. Dearer and nearer. In economics, no, we use these two terms, dearer and nearer. Synonyms and antonyms. Okay, nearer. So petrol price becomes nearer, means cheaper. Petrol price becomes dearer, then it becomes costlier, right? So Actually, what happens, employer and employee. So employer ask about what about your expected salary. Then employee says, sir, my salary may be for house property. I may be in need of 10,000 rupees for dress and other things, or food and other things. Okay, food and beverages, it may be around another 15,000 rupees. Okay, 15,000 rupees. As well as my other entertainment and food and other thing, I need another 5,000 rupees. 30,000 rupees. If you give me 30,000 rupees, I'm pretty happy. Hmm? Is it so? So once, very first time I got interviewed in a college, they asked me, what about your expected? At least I need to get 5,000 rupees, sir. If we offer you 7,000, won't you join? Very much interested. Give me now itself. Join immediately. That's what I answered there. So again, it happens. What about your expected salary? I need to get at least 30,000 rupees. Employer offers him 30 and join. If the employee continues to do the same job month after month, what could be the salary? Could be fixed the same 30. Unless you do something new, how will you get more salary? Right. So this happened in 2025. The employee joined with the employer. 2026, employee is going to do the same job for the employer. Now, what could be the salary? Same 30. Same 30, right? Unless you do some extra work for the management, how will you get the promotion? Sir, compared to the last year, I have some improvement also. I'm able to do much better. Wastage reduced and production increased. Sure, then you will get, but I'm doing the same. Then I will get the same salary. Yes or no? Why do you want that salary? For your food, dress, accommodation, and entertainment, all. But 1 year later, the house property rent increased to 11,000. Food and beverages 15,500. Your entertainment cost increased to 6,500. Now it is not 30. What's the value now? Probably 33,000. Am I right? 33,000. Almost 10% increased. So you will argue with the employer, you gave me 30,000 rupees for 2025's cost of living. Today all the prices are dearer. I cannot afford the same lifestyle with that same money. Give me a small change in the money in my salary so that I can live the same standard. To maintain the same standard of living, now your salary will be inflated to this extent. What is the change happen? 10% change, add dearness allowance, which is 10%. That's how they will calculate. Based on the inflation, usually government decides what could be the dearness allowance can be given. Or you can fix the salary based on the cost of living by the time. 2026, what is the total cost of living index? Sir, to enjoy these benefits, I need 33,000. Okay, we'll fix the salary 33,000. If I fix the salary corresponding to the current cost of living index, no dearness allowance will be there. I fixed in 2026 I cannot calculate. Sir, I cannot calculate what is the amount you required for the existing amount to be spent to maintain the same standard of living. I can have 5 or 6% roughly, I'll add that. That value is called dearness allowance. Dearness allowance. Prices are dearer and for that. So you might have heard about the pay commission. Pay commission. So the pay commission is all about nothing but salary determination based on the cost of living index in the year of fixing the pay commission. Okay. Pay commission. Latest. So what is the latest pay commission? 8th pay commission. So 8th pay commission salary revision to cost center 1.8 lakh crore for the government. Okay, 8th pay commission revision. So if they are revising the pay commission or introducing the pay commission means whatever the standard of living you live for your job. Okay, what about that, sir? If you are going to be a clerk, okay, or if you are going to be senior clerk or CFO, CEO and all, for travel, we'll give car, pick up and drop. For senior, will give scooter. For clerk, you can come by bus. Sir, peon, come by walk. Okay, come on foot, right? In case of uh, residential house property, separate individual quarter with watchman and all, you live as a watchman. In case of peon, right? In case of food, in star class hotels, here you can go on street food like Kai and the bone, whatever it may be. Now, what is the cost I need to spend for getting all this benefit? Sir, it costs us around 1,50,000 rupees, sir. What about the cost for all these things, sir? Only 20,000 rupees, sir. When? 2025. Okay, we'll fix the salary by this way. 2026, I'm not going to calculate again the same way. Instead of that, what can I do? What is the inflation rate applicable in India? Okay. See, current inflation index. What is the current inflation rate? Almost 2.1 percentage. Okay, 2.1 percentage like. Sometimes it may be 5 percentage. 5 percentage. Now, what about the DA rate? DA rate 55% of their basic pay. Okay. So the DA rate being 55% from when? 7th pay commission. Okay. 7th pay commission date 2026. From 2026 onwards, 2025, almost 9 years. In over this period, every period's inflation, no price is now adjusted by adding this DNS allowance every year. If the 8th pay commission comes, no, we don't have the DA. Why? By the time to enjoy this benefit, what could be the cost we need to spend as on this date, 2026? So we'll fix the salary that way, so we don't have the DNS allowance. 27, based on the cost of living, means the inflation index for the 1 year, they will add slightly at the DNS allowance. Slightly at the DNS allowance. Is that clear? This is the logic behind. So, 8th pay commission date, from when it is going to be launched. 1st January 26. See, what is the DNS allowance? Latest DNS allowance fixed by the central government in 2026. Go and see. It may be 0. It may be 0. Thereafter, what happens? Year on year, they will not prepare the pay commission year on year. They will be preparing only once in every 10 years. We are talking about 8th pay commission. Since independence. How long happened since independence? Sir, suddenly you don't ask me such questions, sir. 47 onwards. So 53 here, another 25. How much? 70? 78, 79. Okay, roughly. 8th. Once in every 10 years, they are releasing the pay commission. It's nothing but paving the fresh road, and every monsoon later, here are there, patchwork will be there, no? In the road. Here are there lots of pothalan will do a patchwork. So the patchwork happens here. Okay, the pay commission is a fresh road like, and thereafter, DNS allowance is a patchwork like. We'll manage with the patchwork for how long? Another pay, up to another pay commission. Is there hope so you could not understand the logic behind? Sir, will I expect to give such a detailed answer? No need. For your examination, salary will be given, pay commission means the DA may be given. So in this case, salary may be 1 lakh. What is the DA? 55,000. That's all. Currently, it's 55%. But in your question, it will be given 10%, 12%. Like you no need to worry about memorizing this one. Is that okay? Hope so. You will be now able to understand the first 5 elements. These are taxable. Basic, DNS allowance, fees or commission, bonus, advance salary and arrear salary. Now understand that in case of advance salary and arrear salary, you will be getting lump sum benefit in the current year, in the year of receipt. As you are getting tomorrow's salary today or earlier year's salary in this year. As you are accumulating the earlier year's salary in this year, you will be drawing huge salary falling under the higher tax bracket. Because of accumulating all this income and receiving in this year, you are falling in the higher tax bracket, leads to high tax payment. So unjustifiable. So government says no need to worry about that. If you are getting salary year on year, what will be the tax? Because of accumulating, getting all these things today itself, what is the tax? The difference will be given as relief. Okay, month year on year, if you are paying tax, it may be say 10,000 per year. Okay, for 3 years, but you are paying completely in this year itself, so your tax is 40,000 rupees. For per year 10,000 means for 3 years it's only 30,000. Because of accumulating, getting all the benefits today and paying the tax in lot, then it comes around 40 minutes. The difference between these two will be your relief. CA Foundation Inter, you have the illustrations for the relief calculation. I have worked out in the book back problem solution. So go and see. Even in CMA also, of course, it is available, but usually it may not be expected in your exams. For 5 years question means 5 years arrear salary means you need to get the tax slabs for 5 years. How many of you are able to memorize the tax slabs for this year by heart? Have you by hearted that? Really, it will be again confusing. What is the surcharge, sir? What is the tax rate for the senior citizen, non-resident, old tax regime? So lots of tax rates are there. I could not immediately recollect. If you ask you to recollect 10 years tax rate, then it will be really tough. So it will not be possible to memorize all these things in your exam also may not be expected. But to understand the concept of relief, some model illustrations are there in your CA Institute material as well as CMA Institute material. Solutions also already given. Go and watch that video. Is that okay? Set of 5 items over. Now let's start with the gratuity. So this part. So we have completed wages, fees, commission, advance salary, all these things already completed. Now I'm going to finish up the gratuity. Is that clear? Now, so this slide is the presentation, means provisions for calculating the taxable gratuity. In taxation, you have to mug up these provisions, that's all. You have to mug up these provisions. Solve few illustrations, that's more than enough. Don't waste more time on this. Okay, all the theory background I'm giving related to the dearness element, that's all. To have the foundation only, not expected for your exams. And what are the things you need to keep in your mind to consider this payment being salary? Already we have seen norms to fall under salary. All these things for the better understanding. For the examination purpose, for the calculation and all, no, you have to mug up this. Don't ask me why this number are coming there, sir. Here 15 bar 26, 1 bar 2 and 10. Don't ask me these questions, okay? Okay, whatever the question is there, you have to follow simply. Okay, clear? Why, sir? Now and then some rules formed based on the requirement. That's all. Okay. How much do you want to get from your dad as your monthly perquisites? Whatever the level may be, no problem, sir. Then you will interact with the father and you will fix some number. Okay, that's all. I will study CA seriously, so give me 1 lakh per month as a stipend. Now your dad immediately your dad says, don't study CA. Right, happens, right? The same like government will interact with the various taxpayer. What's the benefit you want? And government says we want so much of tax to run our government. Okay, so it's a tug of war between these two, and they'll fix the taxes. Understand now how to calculate the taxable gratuity. We are going to study 5 aspects. 5 aspects, right? Now, section 10, class 10 is all about gratuity. Is all about gratuity. You can receive the gratuity Okay. Number one, during service. During service. Fully taxable. If you are receiving during service, fully taxable. Okay. And second part is all about after retirement. After retirement. In case of after retirement, first is all about if it is being for government employee. Government employee. Government means central government, state government, local authority, including defense. In all these cases, it is exempt. Most of the cases, it will be not taxable. Not taxable if you are receiving in after retirement. Then, second one is all about non-government employee. Non-government employee. Okay. And payment of gratuity act covered. PGA, payment of gratuity act covered. If the gratuity received from the employer and that gratuity is not covered under payment of gratuity act, okay, if the employment being in non-governmental sector, okay, whichever is the lower is exempted, apart from that balance is taxable. Whichever is lower is exempted. This is called provision. Provision is nothing but exception case. Section 10 clause 10 says that any amount you are receiving from the employer named as gratuity is exempted. Is it always, sir? No. Suppose if you are receiving from non-government employee, there is a slight condition. So that is called exception cases are called provisions. Provided. Whenever we use the term provided, this is the exception case. Generally exempted, but this case it will be exempted only to this extent, balance is taxable. Okay, exempt up to whichever is lower. Number one, 15/26 multiplied by last drawn salary, completed years of service and part thereof. Okay, so I use notations like, try to understand all these things. 15/26 LDS means last drawn salary, CYS means completed years of services. The symbol plus represents part thereof. Part thereof. Part thereof means in a year, even one day above, then the 6 months will be converted into one full year. Okay. 6 months plus will be considered as 1 month. Is that clear? Now, detailed thing is given in text 15/26. Last drawn salary, completed years of service, and part thereof. So for this I use the term CYS, part thereof I use plus sign. LDS, last drawn salary. Is that clear? This plus represents if a year is more than 6 months, then it will be considered as 1 year like. Second point. Static number, statutory limit is there. Statutory limit, which is 20 lakhs. Third being actual gratuity you receive. So from this it is very clear you have to calculate only one. Rest of the two is nothing but you have to memorize the limit and actually what the thing is given in text you can straight away take. So 15/26 into last drawn salary into completed years of service and part thereof. The limit is 20 lakhs. statutory limit, and actual, the third item. Okay. In the third case, non-government employee, payment of gratuity act not covered. The amount offered by the employer to the employee named as gratuity, gracious payment for the retirement. He has to live his life happily during the retirement, right? So after the retirement. So employee has rendered long years of service to the employer. In appreciation of his long years of service, after the retirement, he should live his life happily. So he gives a compensation. That's called gratuity, gracious payment in short. So that payment is given by a non-government employee, where the gratuity is paid as per the discretion of the employer or as per the legal provisions given in the Payment of Gratuity Act. If the provisions as per the Payment of Gratuity Act is followed, then the exemption part is different, and if not followed, the thing may be different. In case if it is from the government employee, it's totally exempted. Totally exempted. Is that clear? In this case, whichever is the least is exempt. Don't worry about memorizing this. 1, 2, 3. The second is also safe. The ceiling or limit being the same, 20 lakhs. Third one is the actual also being same. There is no change. The first one being instead of 15/26, it's nothing but 1/2, half. Last drawn salary is converted into 10 calendar month average salary. Okay. CMOS, 10 calendar months average salary into completed years of service is nothing but completed years of service only. Part thereof, the plus sign will not be there. So slight difference is there. Only these two is not equal. Rest of the two conditions are same. Let me explain these variations here. So now we'll understand gratuity during the service, whoever you are, maybe whether you are government or non-government, doesn't matter. For all the employees, you have to pay the tax for the gratuity you receive as salary. After the retirement means if you are receiving from the government, and it's totally exempted. If it is not being the government, verify whether payment of gratuity act is covered or not covered. If it is covered, then the exemption limit is different, and in case of non-covered, the provision is different. Is that clear? Now, third scenario. After death. Okay. After that. So during service, after retirement, but receiving after death. Receiving after death means definitely received by his legal heir. Okay. Legal heir. In this case, okay, due and payment. Due before death, due after death. Okay. In case due before death, taxable. In case due after death, exempt. So we have to discuss all these things. Okay, all these things in detail. Clear? Now let's see one after one. In this case, 15/26 is different than this one. You have to note this point first of all, half. And here LDS, but here 10 CMOS. Here COS plus, here only COS. I'll explain the difference later on. So let's see first. LDS. Last drawn salary means at the time of retirement, what he draws will be considered as last drawn salary. Okay, last drawn salary. Clear? Last drawn salary. And salary means basic plus DA being forming part of salary or not forming part of salary. As per section 17 class 1 salary, what is called salary defined under section 17 class 1? No. Basic, DA, fee, commission, the profit lay of salary, perquisites are all. That is what about the taxable salary. Whenever I'm talking about what is the salary for the gratuity calculation, right, that salary has different meaning. In this case, salary is nothing but basic plus DA, forming part and non-forming part. So I'll just explain what is called forming part and non-forming part also. You have to understand these two. And salary for this purpose, non-government employee, salary for this purpose. Is that okay? Salary is equal to basic, DA forming part of salary, fixed percentage of commission. These three will be considered as salary for this purpose. Is that okay? Apart from that, it's all about last drawn salary. Here is all about CMAs, right? What is called CMA? Okay. Calendar month salary. What is called calendar? Calendar month? Calendar month is nothing but January, February, March. These are called calendar month. Is that okay? So month means any 30 days. Okay. If you want to go for a special coaching, that center demands you 500 rupees per month. You join on 15th March. What does it mean? The 500 what you pay will be eligible for 15th of this month to the next month 15. This is not calendar month. Calendar month means if I pay 500 rupees, it is applicable only for January month. February month, I have to pay 500 rupees for February month. Is that okay? That's called calendar month. Okay. So if I retire on 25th March, what is the previous 10 calendar month? Leave the March month. Start from the earlier date. February, January, like this. Previous 10 calendar month will be taken. The year in which he resigns, no, forget about that month and leaving that month. Calculate the complete calendar month prior to the year of retirement, month of retirement, 10 calendar month. You have to calculate total the 10 months salary. Why? Usually increment may be given once in every year. Probably in the 10 calendar month, 6 calendar month he drew a salary of 50,000. Thereafter it was increased to 60,000. So for 6 months it may be 50. For the remaining 4 months it's a 60. You have to add up all this thing, divide that by 10. You'll get the average month. Right. So average salary. Is that clear? So 25th March 2025 he retires. Leaving that February, January, December 2024 and November, October, September, August. How many months are over? 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. From 1/5/2024 to 28 to 2025, you have to calculate the salary for this period. Probably 1, 2, 3, 4, 5, 6 up to this period, his salary being 50,000 rupees per month. Thereafter, from here to here, his salary being 60,000 rupees. This being around 6 months, this being only 4 months. So this will be 3 lakhs and this will be 2 lakhs 40. The overall salary for the past 10 calendar month being 5 lakhs 40. Take the average of this. So 54,000 will be considered as 10 CMAs. 10 calendar months average salary. That's how you have to calculate. Remember, in case of last drawn salary, What could be the last drawn salary? 60. So if you are taking the last calendar month salary, last drawn calendar month salary, usually that money may be quite a bit higher than the 10 calendar month salary. Is that clear? See, as it is as per the PGA, Payment of Graduate Act, some extra can be taken. Days rather than half, it is 15/26, some extra can be taken. And completed years of service 26, 7 months, 26 years, 7 months. Then it will be taken as 25 years. But in the case of non Payment of Graduate Act, this partial year, 7 months, no more than 6 months, so it will be considered as 26 years. So this is also bigger number, this is also bigger number, this is also bigger number to that compared to, so you'll get bigger number here, biggest number, and it will give more exemption, more exemption. So from this, it is very easily remember, as per the Payment of Graduate Act, if you are following, you will be getting more exemption than the non-covered Payment of Graduate Act not covered. So 15/26 last drawn salary, completed years of service plus. In case of non-government employee, half rather than 15, it's only half, and last drawn salary is converted into 10 calendar months average salary and completed years of service. Is that clear? Yes, come on, make note of it. We'll meet after. Now, you have to understand what is called DA, farming part and non-farming parts of salary. During the service, your basic salary 10,000 and a DA of 40% may be offered, probably 4,000, 14,000. During your service period, you will be getting 14,000 rupees. At the time of appointment itself, the employer says, during your service, your salary being basic plus DA, what we offer will be eligible. But after the retirement, some retirement benefits may be calculated like gratuity, pension, and some PF and all. No, for those benefit calculation, I don't consider this part fully as 40%. Only 20% I will consider. Okay, if it is being only 2,000 to be considered, or 1,500 may be considered for the retirement benefit. Okay, another 2,500 is not considered for the retirement benefit. So during the service, employer offers you salary plus for DA, you will get 10,000 plus 4,000, 14,000 rupees. For the gratuity calculation, I will take only 10 and 1,500. Is that clear? Whatever the retirement benefits may be, only farming part of salary will be taken. So only in this case, non-government employee Payment of Graduate Act covered, DA will be FPS as well as NPFs. Okay, non-farming part. In most of the cases, we'll consider only this part. Which part? This one. Okay. These three will be there: basic, DA, and fixed percentage of commission and turnover achieved by him. You can remember this very easily. Okay. If I say 3, salary consists of 3, these 3 items will be there. What are they? Basic, DA farming part, and fixed percentage of commission. In commission, again, we have 2 commissions. One is fixed commission, another one is fixed percentage on turnover achieved by the employee. So, employer offers him salary in addition to that 5,000 rupees as a fixed commission every month. That will not be considered as part of the salary here. Otherwise, whatever the turnover you do as a salesperson, on that 2% or 3% will be given to you as a salary. Then that will be considered as fixed percentage on turnover achieved by the employee. Then it will be taken. Okay, 2 commissions are there: fixed commission as well as and fixed percentage commission. So in DA we have farming part, non-farming part. In commission we have fixed commission as well as fixed percent commission. We will consider only fixed percent commission in most of the cases, right? Whenever I say salary 3, then it consists of these 3 only: basic, DA, farming part as well as fixed percent commission, right? In case of Payment of Graduate covered, then we'll take only these 2: basic plus DA, where the DA includes both fixed means farming part as well as non-farming part for the retirement benefit, right? For the retirement benefit calculation. We'll finish up the illustrations first. Thereafter, we'll go for the summary here. Okay, we'll start with the illustration here. Now, Mr. Hari retires on 15th October 2024. Okay. After serving 30 years, 7 months, he gets 4,80,000 as gratuity. His salary details are given below. Okay, his salary details are given below. 24, 25, 23, 24, and these are the salary details there. Determine his gross salary in the following cases if he retires from government service. Okay. Rather than gross salary, I am going to calculate only taxable gratuity. Let me calculate the taxable gratuity here. In the very first instant, as he retires from the government service, fully exempt, not taxable. Hope you will be now able to understand that we have completed this aspect. We have completed this aspect. And second point we will discuss later. Third point, he retires from non-seasonal factory or general, covered by payment of gratuity act. So non-seasonal factory or general, not required to be stated this in question. He retires from non-government employment and covered under payment of gratuity act. Automatically what happens? This provision will be applicable. We will be now covering this aspect. How can we calculate? Gratuity received. Gratuity received. How much is that? 4,80,000 rupees. We are going to calculate what? Gratuity case where payment of gratuity act covered and non-government employee. Non-government. What is the exemption portion? Whichever is the least exempt. As per the first provision, 15/26, last drawn salary into completed years of service and part thereof. Second being 20 lakhs. Third being the actual one, 4,80,000. Among the three, least will be subtracted, so you will be getting the taxable gratuity. Only the first part requires calculations. Rest of the things are easy. 15/26, last drawn salary. Last drawn salary. So when he retired on 15th October 24, year ends on 31st March 25, year ends, and the current year starts on 1st April 24, right? Now at the time of retirement for the year 24-25, it means from that what is the salary? Earlier to that, what is the salary? Okay, for the financial year 24-25, basic salary being 16,000 and DNS allowance 50%. DNS allowance 50%, 8,000. Out of which forming part of salary being 40%. Out of which 8,000, out of that 40% being how much? 3,200 being forming part, not forming part of salary being 4,800. Okay, clear? Now in the case of payment of gratuity act, salary for this purpose being, for this purpose, last drawn salary will be taken. That includes what? Basic plus DA Farming part as well as non-farming part, both will be taken. Basic being 16,000, farming and non-farming both put together 8,000 rupees. So salary for this purpose is 24,000. Is that clear? Now what about the completed years of service? It's not completed year of service and part thereof. Part of the year is also considered as 1 year. 30 years, 7 months will be considered as 31 years. Now come on, tell me the value here. 15 by 26 and 24,000 into 31 years. How much? Okay, 4 lakhs 20 231. Okay. Among the three, the least being this one. I can take this value. 4 lakhs 29,231 is the exempted. Out of 4 lakhs 80,000 rupees, to this extent will be exempted under section 10 class 10. Beyond that, whatever the amount you get now is taxable. That value being 50,769. 769. So this is taxable gratuity. Is that clear? This will be falling under what? Section 17 class 3, profit in lieu of self. Now hope you will be able to understand this logic. Any amount from employer or former employer or any fund will be considered as profit in lieu of salary, except what? The following: to the extent exempted under section 10. To the extent of 4 lakhs 26,900 rupees, what we have calculated, not to that extent exempted under section 10 class 10 is not considered as profit in lieu of salary. Beyond that, you are getting another 50,000, right? That will be taxable under profit in lieu of salary. Is that clear? Hope I already told you, no need to worry about this term here. So we will be studying one after one subsequent lectures. Thereafter, if you get back, you will be able to understand easily. Clear? Any doubts here? First illustration is over. First illustration is over. What happens if he retires from seasonal factory in a private sector covered under payment of gratuity act? It's a very rare in your exams. Only CMA has this question, but CA also, I think, very rarely they ask this. But in exams, you don't expect this illustration. In case of seasonal factory means among the, out of the 12 months, the employee gets employment only for 4 or 5 months. Seasonal employment. Okay. So EAD Parry in Trichy Pettavatala, so they get more employment, or they are in need of more laborers during the sugar harvesting as well as converting that into the sugar cane. Sugar. Okay. Sugar cane is converted into sugar. So for that short period, 4 to 5 months, they appoint the employees. Thereafter, they will go off. Next year again, for the same period, they will come for the employment. Only 4 or 5 months. So when I had a chat with the HR, so what happens for the remaining days? So they are actually farmers, sir. They will work in their own farmland. Only this period, though they maintain the farmlands, they will come for your temporary jobs like here. So regularly they will get the job. Okay, that's called seasonal employment. They don't get the job for the entire 12 months. They will get only 4 or 5 months. In that case, the slight difference is there. Rather than 15 bar 26, this value will be 7 bar 26. Half. Partial employment, rather than 15 bar 26, it's only 7 bar 26. Right? Clear? So then what happens in this case? This number is totally different. Half, this number is different, right? What could be this number? Come on. 7 bar 26 into 24,000 into 31. This number could be 2 lakhs. This number could be 2 lakhs 308. Among the three, this will be the least one. So from that, you have to subtract to get the taxable gratuity. Is that clear? You no need to mug up this. Just have a slight knowledge over this. That's all. Not more than that. Very important point is gratuity, payment of gratuity are covered, not covered only. This will be rarest scenario. Seasonal employment means that 15 by 26 is reduced to 50% of that. 7.5, you round off to 7 like. Is that okay? That's how you can keep that idea in your mind. Now, what happens? Fourth one. He retires from private sector where payment of gratuity act not covered. Payment of gratuity act not covered. Then gratuity received. Gratuity received. Okay. Payment of gratuity act not covered. Non-government. The amount received being 4,80,000. Minus whichever is the least is exempt. In this case, what is the provision? Half. Number one being half into 10 CMAS into completed years of service. Second one being limit or ceiling, statutory limit 20 lakhs. Third one being actual graduate received is nothing but 4,80,000. Half into, you have to find out the 10 calendar month salary. Completed years of service, 30 years and 7 months. 7 is part of the year, will not be considered. Even though 30 years, 11 months and 30 days, even 1 day short, you will not consider that as a full year. So you have to take only rounded off fully completed years. If I use a plus, it represents part thereof. In your exam, you write fully. Okay. Don't write only plus. Okay. They will give minus mark. So if you want to get plus mark, you have to use full terms. Now 10 CMAS. Right. So now you see, when did he retire? 15th October 2024 he retires. Year ends on 31st March 25. This financial year starts on 1st April 24 and 1/4/23. So as this is the date of retirement, we have to consider the previous 10 calendar month. Leave the month October. So you have to end with what? 39/2024. For the calendar year 2024, we have completed 9 months for 10 months, 1 extra month from the earlier month. Probably 1st December 23 onwards. From this date to this date, I hope we have how many months? 10 calendar month. 10 calendar month. Is that okay? Even though he retained the last day of the month, yet that month is removed and you have to start with the previous 10 calendar month. Is that okay? So 15th October, rather than 15th October, if we trace on 31st October, what about the 10 calendar month? Again, September, go back. August, July, June, like you have to go back to the previous year. So the last date only, no sir. Last day also, okay, as per the Indian English calendar. Okay. The calendar ends, the time ends at 12 o'clock in the midnight. Okay. Until the time that 31st October is there. But he loses the signing power by 5:30, the office hours later. He loses the signing power. So we will consider he worked only part of that month will not be considered for the calculation purpose. You leave that and prior to that 10 calendar month will be taken. Prior to that 10 calendar month will be taken. Right. And during this period, the salary is 15,000. During this period, his salary being 16,000. We'll calculate the DA later. Finally, you can add. Okay, that's only percentage on that, no? So we can calculate that later on. Otherwise, you can add here. 50% out of that 40%, 20%, right? 50 into 40, how much? 20% will be the forming part. Here we have to take only forming part of salary. Okay, so 3,000. Here 3,200. Am I right? Okay, out of 16,000 rupees, your DA being 50%, 8,000. Though the DA being 50%, for this purpose, we have to consider the DA forming part of salary for the retirement benefits. At the time of retirement, I will include only to the extent of 40% of the DA. So 40% of DA being how much? 3,200 only considered for the retirement benefit. So graduate is a retirement benefit. So as per the provision given in the question, so you have to consider only these two parts. 16 plus 3,200. Now prior to the date of retirement, in this period, we have how many months? How many months we have here? 6 months. Here we have how many months? 4 months. So for the 4 months, 18,000 into 4, 72,000 rupees. For the 6 months, 19,200 into 6. Come on, tell me. 1 lakh? 1 5. 1 lakh 15,200. And total value being 1 lakh 87,200 for how many months? 10 months. You divide that by 10 so that you will get 10 CMOS. 18,720. Hope you will be now able to understand how to calculate the CMOS. I will put that value here. 18,720. 18,720. Now multiply all this value. The final value being 2,80,800. Among the three, the least being 2,80,800 is exempted. Beyond that, balance value being 1,99,200 is taxable under section 17 class 3, profit in lieu of salary. Also salary. Profit in lieu of salary is also part of salary as per section 17 class 1. Is that clear? Hope now you will be able to understand this part. Now, Mr. Hari retires on this date. Leave that. Fifth element. Gratuity received by Mrs. Hari. Due date. Due date. Okay. Received date. Received date is not a matter. Due date is on which date? 18/10/24. Okay. Received date is not a matter. Another case 25/10/25. 24. Scenario A and B. So the assessee died and the gratuity received by assessee's legal heir. The date of death being 20/10/24. Date of death 20/10/24. Now tell me, is the due before or after? Okay. This is before death. This is after death. So gratuity became due before the death. The moment it is due, then it is taxable in the hands of the assessee. But he died later on. So now the amount is received by his legal heir. Then it is taxable in the hands of the legal heir, and as a representative for the assessee, she has to pay the tax. Okay, taxable. But the assessee died. Thereafter, the retirement calculation is calculated and legal heir is settled by the employer. So if the assessee died, no, employer settles all his accumulated benefits to the legal heir. In this case, that entire income is accruing only in the hands of the legal heir. Legal heir. So any receipts taxable in the hands of salary means there should be employer-employer relationship. Now legal heir has no employer-employer relationship with the regular employer. Only the assessee has the employer-employer relationship. So Hari has the employer-employer relationship, but received by Mrs. Hari. And due in the hands of whom? Mrs. Hari, not in the hands of Hari. Because Hari died. By the time of his living, this income is not accruing. As it is not accruing, the date of accruing only when it is now in the hands of Mrs. Hari. By the time the amount is received by Mrs. Hari from the employer, question is, Mr. Employer and Mrs. Hari are not being the position of being employer. They are not called being employer-employee. So definitely this is not salary. As it is not salary, it's not falling under any other head, so it's totally exempted. It's totally exempted. Is that clear? Due date is on 25/10/24. Due happens after death, so it's totally exempted. What is not required to be considered here? Payment is not a matter. Due is going to be verified. If the due happens before the death, then automatically taxable. If the due happens after the death, means the due happens only in the higher's hand, so it's not taxable. If it is due becomes in the hands of the assessee, then automatically it's taxable. Okay, it's taxable. Now see here. Gratuity is the payment in appreciation of past services rendered. Gratuity received during the service fully taxable. Government employee, central, state, local authority, defense are exempt. Only these four. Non-government employee, where payment of gratuity act covered, whichever is lower, 15/26, here 7/26 in case of seasonal establishment. And lost drawn salary, salary in case of employees drawing daily wages, then average 3 months wages is taken. Okay. In some cases, 3 months salary will be taken. Okay. Completed years of service and part thereof means 6 months and above will be 6 months and above. Okay. It's not exact 6 months. 6 months plus 1 day will be considered as 1 year. And ceiling is 20 lakhs, less amount exempted earlier. Amount exempted earlier, I have not discussed up to now, so I will explain this one now. Okay, amount exempted earlier. So, A being the employer, B being the employee, right? Okay, so B rendered service to A, and for that A gives him gratuity. Okay, so gratuity received from A being 2 lakhs minus whichever is the least exempted, right? As per that provision, 2 lakhs is fully exempted. 2 lakhs is fully exempted. Is that okay? Or 1.5 lakhs is exempted. So balance taxable being 0.5 lakhs. Is that clear? That's how we calculated once, probably in 2018. We assume B retired on 2018 from A. Thereafter, B joined with X, new employer. Now B rendered service to X. Now X offers him gratuity once again after retirement from the new employer X. This happens in 2025 Jan 1. Is that okay? 2025 Jan 1. By the time gratuity received from this new employer being 10 lakhs minus whichever is the least is exempted. Number one, the same condition 15/26 and all will be working. Second one being ceiling, from that ceiling, exemption availed earlier will be subtracted. Exemption availed earlier will be subtracted. So usually the ceiling is 20 lakhs minus 1.5 lakhs. Now the revised ceiling being 18.5 lakhs. Third being actual. Is that clear? So ceiling 20 lakhs is in a lifetime. If he has already enjoyed some deductions or exemption for any gratuity from the earlier employer. Okay, that exemption extent will be subtracted from the 20 lakhs. Balance ceiling will be 18.5 lakhs. Right. In case of non-government employee, payment of gratuity act not covered. Half into 10 calendar months, CMAS will be taken, completed years of services, and all these things are the same. Gratuity received after the death of the employee, gratuity is due before the death. If the due date is before the death, then it is taxable in the hands of the recipient. Okay. If the gratuity is due after the death, then it is not taxable. It is not taxable because the employer-employee relationship is missing. Is that clear? Hope now you'll be able to understand. So with that, gratuity is completely over. Any doubts here? Shall I move on to the next one? Okay. Now next one is all about pension. So I am going to deal this one. Annuity and pension. So in the very first block, we have completed basic salary, DA, fee, commission, bonus, advance, and all this completed. But I missed this one. Bonus. In case of bonus, it is going to be taxable only on receipt basis. In all the cases, receipts are due, whichever is earlier will be taken. But in the case of bonus, only if you are receiving, it is going to be taxable. If the employer says, I will give you bonus of rupees 1 lakh for this financial year, but it's still pending, it's not your income. Only the time of receiving that 1 lakh will be considered as taxable. Now, other cases, due or receipt, whichever is earlier will be applicable. Here, it's not so. Gratuity have seen. So now we are moving to pension. Is that clear? Most probably by tomorrow, I may try to finish up to all this part. Okay, we'll try to finish up with the rest. Let's start with the pension. Annuity or pension. Annuity or pension. Annuity or pension. After the retirement, periodical payment. Okay, it may be quarterly once, yearly once, or half yearly once, monthly once. From the employer or from anywhere, if you are getting a periodical payment, then it's called annuity. If the same payment is month after month, usually we'll call this being the pension. Pension and annuity received from the employer, okay, because of the services during the employment, getting after the retirement will be considered as salary only. Okay. In case annuity from present employer, always taxable salary. Ex-employer, also taxable, which is named as profit in lieu of salary. During the employment, if you are getting, then it is called salary. Okay. But after the retirement, if you are getting from the previous employer, then it will be considered as profit in lieu of salary. Already we have seen, right? So this case. Okay. Any amount from the employer or former employer or a provident fund or any fund, former employer. Okay. To the extent exempted, will be considered as the profit in lieu of salary. Means to the extent, other than the extent of exemption, will be considered profit in lieu of salary. To the extent of exemption noted and commuted pension is not going to be taxable. Is that okay? So rest will be considered as profit in lieu of salary. Rest will be considered as profit in lieu of salary. Right. So here, present employer, any annuity you are receiving from the present employer is taxable as salary. Ex-employer is taxable as profit in lieu of salary. Annuity from other employer, okay, like insurer, family pension is taxable under income from other sources. Okay, so you start invest with the LIC. Okay, during your service period, periodically you are investing. After a few years, probably 20 years or 30 years later, from the LIC you will be getting a periodical amount named as annuity, sometimes named as pension. Is that okay? So if I'm being the employer, having the employee, I'm being the employee, employer gives me backup support after my retirement by way of annuity or pension. I'm very happy with that. If I'm being the private employee or employer, I own my own business. I too want to get my retirement some years later. How can I get my retirement? Retirement means I need to have some constant money for survival. So how will I get? So during my working days itself, I can plan for the retirement benefits. I can start investing some money with the LIC company or some other companies. At the time of retirement, I will now start withdrawing small amount from the LIC out of the amount deposited during my service period. Okay. So those amount will be named as annuity only, but I don't have any employer-employer relationship with the LIC company. As employer-employer relationship is missing, still I am getting similar receipt from the LIC will be called as income from other sources. Not being the salary, then it will fall under income from other sources. So present employer, salary, and former employer, profit layer of salary. Other than employer, if I am receiving from any fund out of my deposits, then it is called income from other sources. Right. And family pension is also annuity. Family pension is also annuity. Family pension is nothing but after death of the assessee, his or her spouse gets pension. Then it will be called as family pension. Okay. So employer, A died and A spouse thereafter gets a salary. So A rendered service. For that, employer offers him pension. Okay. After the retirement. Service and getting pension after the retirement. Suppose A death happened and employer now commits to support his spouse. Okay. So in this case, any anti-paid, will not be considered as salary because there is no relationship between these two as employer-employee relationship. We have the employer-employee relationship between these two, but not between these two, right? So if Mr. A gets a periodical payment from the employer, then it is called salary. But A's spouse gets any payment regularly from the employer because of A being the employee of employer, then this is called income from other sources. Otherwise, family pension. This is called the family members are getting the pension. That's why it's called family pension. Is that okay? We'll study the family pension along with the income from other sources. As I already told you, if you cover 4 chapters, the 5th chapter is free. So now we have covered 2 points in income from other sources. One is scheme and insurance policy. Next one is family pension. Okay. Even MP director salary and all, no income from salary for the MP, MLA, all these things are all again falling under income from other sources, right? Now, gallantry awards, gallantry awards also be exempted, okay, like Paramveer Chakra, Mahavir Chakra, Veer Chakra, okay, where the central government or state government giving any pension or annuity to the family members after the death of the assessee during the gallantry award fight, army and all, no, Paramveer Chakra, Mahavir Chakra and Veer Chakra. Usually most of these are offered after the death only. So naturally the pension will not be for the assessee, automatically family members will get. Okay, family means spouse, children, dependent parents, brothers and sisters will fall. Anybody can get the pension. Okay, spouse, children, dependent parents, brothers and sisters, if they are getting this pension for their relatives' death from their employer, will be considered as exempt, means taxable under income from other sources. Sorry, exempt. In this case, exempt. Okay. Disability pension also exempted. National pension scheme also exempted, where we are going to refer this along with the deduction chapter. National pension scheme offered to the employee who joins on or after 1/1/2004. 1/1/2004. Okay. This is called in short NPS. NPS. See, what is called salary? What is called salary? NPS. Will refer under section 80CCD. Any of this is going to be studied later on. Later on. Okay, let me finish up the summary related to the pension here. So, if you are getting the annuity from present employer salary, ex-employer then profit in salary, and you are getting the pension from other insurer or employer of my spouse and all, whatever it may be, also considered as taxable under income from other sources. Paramveer Chakra, Mahavir Chakra and Veer Chakra, like any gallantry award winner gets, his spouse gets, family members getting, then this will be totally exempted. Disability pension, if it is granted, especially personnel of armed forces, army related, armed forces, and exempted. National pension scheme. Earlier, government employee gets pension after their retirement, right? But 1/1/2004 onwards, no, that pension scheme was slightly changed from the existing pension scheme to the new pension scheme. As per the new pension scheme, it's a contributory pension scheme. During your service, as being yourself employee, you have to deposit money. Employer says, I too deposit some money. The amount what we have deposited in the account now, at the time of retirement, whatever the amount available there, you can withdraw as your pension. So your money will be withdrawn later on. So earlier, government commits to pay the pension, but government has lots of burden due to the pension commitment. So suffered a lot of financial crisis. Immediately, government made a decision. We are not going to give the means the pension hereafter. We give only compensate. Means new pension scheme. You have to deposit and I have to deposit. Okay, compensate. You compensate, I have to compensate. Right. That's what about NPS scheme, National Pension Scheme. Right. Now, we'll move on to this one. The seventh is the most important for the calculation part. Seventh is the most important for the calculation part. I think I'll give the format now. We'll solve the illustration in the subsequent classes. Right. Now, other cases. Leaving the cases what we have discussed earlier. So, we will be now dealing the other cases. Pension. Okay. Pension. Okay. Now, you can get the pension monthly or consolidated. If you are getting the pension monthly, it's taxable. Or consolidated. Sir, I don't want to get my pension month after month. Estimate total pension I may get over my life, remaining life. Calculate and give me in single lot today itself. Then it's called commuted pension. It's called commuted pension. Okay. Then monthly pension is otherwise called as uncommuted, month on month. Uncommuted pension as well as commuted pension. Okay. In case of commuter pension, we have again two classifications. One is if the commuter pension received from government or government employee or judges of High Court and Supreme Court or LIC annuity plan. LIC annuity plan. If you are receiving the pension commuted under these three from these three entity, then fully exempt. Fully exempt. This one is fully taxable. This one is fully exempt. Okay. In case of non-government employee, again we have two subdivisions. Has he received gratuity or no gratuity? If he receives gratuity, okay, one third of total commuter pension is exempted. One third of total commuter pension is exempted. This will be exempted. In this case, no gratuity, half of total commuter pension is exempted. Half of total commuter pension is exempted. Clear? So remember, gratuity, one third of total commuter pension. Why? Already you enjoy a benefit. You are enjoying one more benefit. So I'll give exemption only one third. Sir, I don't get gratuity, sir. Oh, you don't get other than this benefit. Okay, I'll give half of your total commuter pension as exemption. Clear? Now for an example, Mr. X, his position for the financial year 1/4/2024 to 31st March 2025. Until 1/7/2024, he is in employment and receiving a salary of say 1 lakh. 1 lakh per month. 1 lakh per month. 1/7/2024 onwards up to 1/11/2024, he gets a pension of rupees 40,000 per month. 40,000 per month. Is that okay? So immediately after the retirement, he gets a pension. And on 1/11/2024, okay, up to 1/2/2025. Out of 40,000, almost 30% commuted and received in lot. 30% may be 12,000. He says, sir, I don't want 12,000 rupees for my regular uncommuted pension. Rather than you give me the total for the 12,000 rupees. Okay, there's a calculations and all. You no need to worry about that. So government says, okay, around 6 lakhs you will be enjoying as a lump sum consideration. Thereafter, you will be getting only 70%. 28,000 rupees you will be getting month on month. This is happening by this time. Is that clear? You don't bother about this number. This number is calculated based on some annuity and all. Annuity is nothing but probably 12,000 you surrender. No. Per year, 12 into 12, 1,44,000 rupees. What about your life expectancy and all based on that? Trial and error method. You will think you will be living for 80 years and what would be the amount and discount factor. So all these things you will be studying under actual science. It's not our syllabus, no need to bother about that. So we'll assume it may be 6 lakhs, an around rough number, rough number. In your exams also, you'll get the rough number only. Around 30% of your regular pension commuted, and you got a commuted pension of rupees 6 lakhs. So 30% commuted, balance 70% will be a regular uncommuted pension. So 40,000 out of that 70% being 28,000. On 1 to 2025, no. Again, another 40% you commute and receive approximately another 7,50,000 rupees. Thereafter, you will be getting only how much? 30% commuted, 40% commuted. Still, you have only 30%, it's 12,000 rupees you are getting month on month salary. Is that clear? Now find out the total taxable salary. Total taxable salary. So one of the interesting illustration to make you understand the concept. We assume that he receives no gratuity case. No gratuity case. Now let's start with salary. Let's start with the salary. So from this date to this date, how many months are there? 4, 5, 6 months, 3 months. For the 3 months he is in service, so 1 lakh into 3, he gets 3 lakhs. He gets 3 lakhs. Is that okay? Then pension. Also part of salary. From this date to this date, 7, 8, 9, 10, 4 months. For the 4 months, he gets a regular salary, uncommuted. He has not totaled his pension. He gets month on month the regular pension. So 0.4 lakhs per month. Into 4 months, 1,60,000 rupees. 1,60,000 rupees. And from here to here, 11, 12, January, 3 months. 3 months, right? 11, 12, January, 3 months. Okay. For the 3 months, he gets only 28,000. So 0.28 into 3 months. How much? 84,000. And from here to here, February and March, 2 months. For the 2 months, he gets 12,000 each. So this value being 24,000. 24,000 pension. 3 lakhs, 1,60,000, 84 and 24. Is that okay? Pension. We got the pension here. This is called monthly pension, uncommuted pension. Exemption will be applicable only for the commuted nature. So we will assume that he is being the non-government and gratuity is not received. So this concept is going to be studied. So we assume no non-government as well as no gratuity case. He gets the first commuted pension being how much? 6 lakhs. Commuted pension. Commuted pension. On which date? 1/11/24. How much is that? 6 lakhs. Minus how much is the exemption? So half of the total commuted pension is exempted. Half of the total commuted pension. What is the total commuted pension? See here. 6 lakhs Mr. X gets is only 30%. Then full commuted pension being 100/30. This will be the full pension. Out of that, how much will be the exemption? Half. What is the value you are getting? Huh? You have calculated fully. Okay, 10 lakhs. 10 lakhs is exempted. But we have only how much? 6 lakhs is available. So entire 6 lakhs is exempted. You should not subtract 10 lakhs from 6 lakhs, making it minus 4 lakhs. It's not possible. Always remember, after subtracting, that value should not be always negative. If it is negative, it is restricted to 0. So 6 minus 10, you make it as 0. Nothing is taxable. Nothing is taxable. Again, he gets one more commuted pension on 1 to 25. How much? 7.5 lakhs. Come on. How much is the exemption? The amount remains unused to only be exemption. 4.5 lakhs. Again, don't calculate as a fresh total commuted pension. So already he got a commuted pension. So if he gets a commuted pension already, To what extent he enjoyed the benefit, still enjoyable benefits remains unused, can be used here. So in his lifetime, he can enjoy only to the extent of 10 lakhs. First itself, he enjoyed 6 lakhs. Still, he has time to enjoy another 4 lakhs. Another 4 lakhs, not 4.5, 4 lakhs. So you can subtract only 4 lakhs here, minus 4 lakhs. Then 3.5 lakhs is taxable income. 3.5 lakhs is the taxable income. So the total taxable in the income in this case being add up of all this value. No gratuity case. No gratuity case. Come on. 9 lakhs 18,000. What happens, sir, if he receives gratuity? Salary is taxable, uncommuted pension is taxable. These things are taxable. Only commuted pension has the difference. Only commuted pension has the difference. So in case of commuted pension, 6 lakhs into 100 by 30, because 6 lakhs is the 30%, full commuted pension is nothing but 6 lakhs into 100 by 30. Out of that, as gratuity is received, only 1/3 will be eligible. 1/3. Okay. 6,66,667 only possible, right? Am I right? So out of 6 lakhs, subtract that 6 lakhs something. Nothing is taxable. But in the next year, 7.5 lakhs out of 6 lakhs 667 already we enjoyed this much. So still how much we have the benefit to be deductible? Yeah, this one only be subtracted. So balance being 6 lakhs 83,333. Clear? Hope now you'll be able to understand. Gratuity received case, gratuity not received case. See the provision. In any other case is the most important. Uncommuted pension is always taxable. If you are receiving month on month regularly, that is called uncommuted, untotaled. Okay. In case of commuted pension, government employees, judges of High Court and Supreme Court and LIC annuity plan, fully exempt. Second, non-government if gratuity is received. If the employee being non-government but he receives a gratuity, already you enjoyed one benefit, no? So hereafter you will be eligible for only 1/3. 1/3 of what? Total commuted pension. Less what? Exemption available already. Okay. So first case we have calculated 1/3. Thereafter any amount pending can be enjoyable. Okay. Maximum this one minus any amount already enjoyed can be subtracted. Balance is enjoyable. In case of non-government gratuity not received, then exemption will be half of the total commuted pension. Exemption will be half of the total commuted pension. Is that clear? Hope now you will be able to understand the concept of pension. We will continue the illustration.